Welcome back to Instables, everyone. Again, going over our intraday swinging long perspective as we're leading into tomorrow's jobless claims 1 hour before market open. Again, after yesterday's inverted hammer, again, giving us that continuation on that rejection that we had again from Monday, getting that rejection on our 50-day moving average. Now sitting on a doji candle. Where exactly are we headed after tomorrow's jobless claims? What is our bullish and bearish case scenario from here? I'm going to go over exactly what we're looking for from here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room. Go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into this buy with you guys here, again, looking at our intraday perspective off the bat, looking at our candle structure. So we know exactly where we're headed next again. After yesterday's hammer candle, again, assuming that we did have, again, bulls coming in, showing us that rejection of bulls that is an inverted hammer, showing us that continuation on lower. So again, we did have this pullback sitting on a doji candle now just below our prior area of balance that we had, again, from Friday. So again, that is where we are sitting, just below our prior area of balance. We do have support here that we are running into on our 200-day moving average here at 290. Again, we have a zone between 290 and 292 that we have support that we are going to be looking for a possible reversal candle for possible intraday momentum to the upside. That is going to be our possible bounce on our 200-day moving average, again, between 290 and 292. That's what we're looking for if we continue on lower. But if we do continue on with bullish momentum, if we get, again, higher increases in unemployment that, again, Powell has been looking for, then we will have a spike. And in my opinion, we will be looking for that rejection on our 50-day, or to see if we can get back above it to possibly continue on higher. Again, our 20-day is still above our 50. We are curling over. We want to see if curling over here becomes bullish momentum overall, or if we are going to continue on lower below our 50. And we do look for that confirmation on bearish confirmation to the downside. So again, we are going to be looking for either that bullish or bearish confirmation. We are currently sitting on a pullback, about to test our 200-day moving average, looking for more confirmation overall. Again, if we do continue on lower, looking for that rejection to the downside on our 200-day moving average for possible momentum to the upside on this bounce. That's what we would be looking for from here. But again, that overall strength, that overall momentum, like I have been mentioning, is going to come in next week, leading into many jobs reports that we do have. Again, tomorrow we do have jobless claims, and that may lead and anticipate going into the next day. Again, as we're leading into jobs reports the very next week, we may anticipate similar jobs reports that come out the very next week, and we'll see exactly if we do continue on to anticipate that. And even more importantly, the very next week, we have CPI coming out. Again, our inflation report that we are looking to see if we are going to continue on with decreases in inflation. Again, we had multiple decreases in inflation. Our most recent CPI came out higher than expected, but lower than prior. Again, not exactly the best CPI report that we were looking for. However, with PPI coming out a couple days after, higher than expected, we did have that pullback. And so we are very much on watch for that CPI come out in a couple weeks. So here on our weekly chart, as we're looking at our swing perspective, looking at our 20 weekly moving average crossing above our 50 weekly moving average, looking to see if we do close with our 20 weekly moving average above our 50 weekly moving average is key. We are still looking for that possible bullish momentum since we are crossing higher here. Again, we have not crossed higher here throughout the duration of our sell-off that we've been having for the last year, and now we are crossing for that possible bullish momentum again. Since we did cross lower, we have been overall on a sell-off, now looking for possible bullish momentum, and that's why we're watching out for that possible strength. Again, if we're looking at our MACD here on our weekly chart, we do have our EMA lines that are above the median MACD showing us that possible continuation momentum, even if we are pulling back with our 12 and our 26, which is why we are cautious intraday at this point in time. But again, if we do somehow cross back higher, even if we do cross back below our 26 and then we cross back higher later, we are overall going to be looking for that confirmation here, increases in buy pressure, again, increasing and confirming that we are going to continue on higher, that it will be confirmation and we'll be ready for that confirmation and major move to the upside as far as our swing momentum. And again, since we do have our 20 weekly moving average crossing above our 50 weekly moving average, we would be looking for possible confirmation next week on a possible engulfing candle. So again, next week's candle will be very key if we do close above our 20 weekly moving average with the possible engulfing candle, or if we do possibly close below our 20 weekly moving average. We'll see exactly how next week's candle closes. That will be key on where we continue from here. And now looking at our long perspective, looking at our monthly chart, again, closing the month here again today, the first month of our new month here. Now closing with the rejection on our 20 monthly moving average again, showing us this clear rejection with our wick, with bulls that did come in. Again, this was a solid green bar that was here, and we did mention that this would be a possible rejection candle, and sure enough, we are getting a rejection candle. So either we are continuing on with that rejection candle, or we are going to be looking to see if we can close higher here to possibly close above our 20 monthly moving average, which will give us that signal on that bullish momentum, in my opinion, to continue on higher. And ultimately here on our long-term momentum, what we want to see here is our 12 crossing above our 26 on our MACD. If we are not crossing above here, no matter what happens, we are not looking bullish. So again, we want to see if we can cross higher here. If we do not cross higher, then we are not overall bullish. Again, since we did cross below our 26 on our monthly MACD, we have been having this pullback. So again, we do want to see our 12 cross above our 26 to see that continuation on that long-term momentum. So again, intraday, we want to see that possible bounce. If we want to see that continuation, we want to see that bullish candle structure and close next week on our weekly chart. Again, recapping on our intraday momentum, sitting on a pullback from yesterday's hammer candle, continuing on with that hammer candle. We want to see exactly how tomorrow's candle closes. If we do continue on lower, just retest our 200 moving average. Again, tomorrow's move very much will be dependent on how jobless claims come out as. Again, from there, we will be anticipating next week's jobs reports, and we'll see if our 20-day does cross below our 50 ultimately, if we are going to continue on lower, or if we do hold higher here and we possibly continue to curl back up. That is our overall outlook here. And now again, with that said, guys, if you are a day trader, if you're market prepping before the market opens, looking for pre-market news that you may have not seen, very volatile breakouts that we mentioned every single day in the Instabulls room, go to instabulls.com in the description below, and for only $15 a month, you will never miss a breakout alert today again. And again, all of you Instabulls continuing to take with market gives us as we have been. Again, very choppy today as we are sitting on a pullback after a inverted hammer. But again, we will see exactly how next week's data comes out, where exactly we do head next. And then from there, we'll know exactly how we're going to play the market. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.